Hello there, ladies and gentlemen. Welcome to Stock Market News Recap Show number 3 ever in history. Today, we're going to do like we usually do. We're going to cover what happened in the markets this week. We're going to cover basically the biggest news stories, in my opinion, and there were a lot of them this week. There are a lot of big stories out there. And then we're going to cover what to look for in the next week, guys. So first, let's go ahead and take a look at the markets. Leave a thumbs up if you enjoy these new videos, guys. I enjoy doing them every week for you guys. So first off, the markets this week, the Dow Jones was just fractionally down 0.1%, not much of a move at all. The S&P 500 was up 0.1%, and the NASDAQ was up 0.1%. So basically a flattish week overall, but there was a lot of news this week. So number one news kind of came out today, actually, and that was the jobs report. So employers in the U.S. added 227,000 non-farm jobs in the January period for the Bureau of Labor Statistics reported on Friday. The unemployment rate inched up to 4.8% from 4.7%. Economists were projecting 175,000 jobs added. So basically, a pretty nice beat on the jobs numbers. Now, a lot of people feel like the jobs numbers are not real or something. And I wouldn't say a lot of people, but there's a certain amount of people out there that feel like that. I get some comments on when I talk about the jobs reports. And I think it has a lot to do, honestly, with a lot of Trump, supporters, and a lot of, what Trump has said basically is like against the jobs numbers, and they're not real and this and that. And I kind of like to judge it based upon how am I doing? How are my businesses doing? They're all doing fantastic. So I don't have any reason to think this job is not real. My parents' companies, they're doing fabulous. All my friends' companies, they're doing fabulous. They're having employees and whatnot. So I have no reason to think the jobs numbers are fake, or they're not real, or they're not accurate. Maybe they're not perfectly accurate, but the fact is I have no reason to think anything other when I see nothing but success all around me. So that's kind of why how I judge the numbers is what am I actually seeing out there in the real world? So that's what I look at, guys. So the next biggest story is Apple, the monster, the biggest company of them all, reported numbers, guys. And they did a pretty dang good job. I got to give it to them. So first off, the biggest thing by far with Apple is iPhone units. iPhone units a lot of people were scared, including myself, that they might never be able to grow iPhone units. Maybe it's just going to stagnate. They were able to grow iPhone units 5%. They grew from 74.7 million in last year's period to now they did just over 78 million. So 5% gain in iPhone units. And this is huge for Apple and huge for Apple stock, because there was a lot of worry out there. There was a lot of worry that maybe they just can't grow iPhone units anymore. And maybe this isn't the increase that they saw from the 5S to the 6, if you guys remember. They were reporting 20-30% iPhone growth year over year. So it was really ridiculous. Now the 6S to the 7, 5%, but it's growth. So that's what matters, because when you look at these numbers here, guys, look at the amount of revenue they get from the iPhone versus everything else. They're entire, and basically dwarfs their entire other business. I mean, look at the iPad. iPads are 1/10 of the revenue. The Macs are 1/8 or 1/9 of the amount of revenue. Services. Now, services is a line you got to pay attention to here, because this is the fastest growing business for Apple right now is services. 18% growth year over year. That's now a business that is over $7 billion. So it's projected within 2 years from now that will be over a $10 billion business for Apple. By next quarter, services will be the second biggest business for Apple under iPhone. Now, iPhone still dominates things, and that's what made the stock go up, is strictly iPhone units. So I look at Apple and I say services is really nicely, growing. I see iPhone growing. That's a really positive sign. And I see iPad's really weak still. It's amazing to me how weak iPad is. I have no clue, how they can correct that. In my opinion, they got the best tablets out there. I wouldn't use nothing other than an iPad. I would consider maybe getting another type of phone than an iPhone, but tablets, iPads kill the competition, but yet They cannot grow that business, down 22% year over year. That's a huge drop off there, guys. So we'll see what happens with iPad and the rest of the business, but needless to say, Apple did what they needed to do to impress Wall Street, which was show growth in iPhones and get that out of decline, and then also show a promising new sector, which is the services. And one last thing I'll draw your attention to, and this was kind of a negative thing, was the other products category was down 8% year over year. And I saw a lot of people getting the Apple Watch 2 for Christmas and whatnot, and then they got the new wireless earbuds that Apple came out with. Those aren't really in this quarter because it took them so long to really come out. So that revenue is not in this quarter, but still down 8% with the new Apple Watch 2 out. That is surprising for me to see that. I really thought they would grow that business, maybe not gangbusters, but at least grow a bit. So maybe the Apple Watch 2 is growing in that segment. They don't break it out. Maybe it's actually the Beats business that's declining, or the Beats business that's having trouble there, the headphones. So we don't know because they don't break it out. But anyway, so that's Apple. That's the second biggest story. Third biggest story, another tech beast came out. Facebook. Look at these Facebook numbers. They're ridiculous, guys. Revenue up 51% year over year, from $5.8 billion last year to $8.8 billion in this last quarter. That's ridiculous, 51%. But the most impressive thing is the bottom line. Look at net income there, down a few lines there, guys. Net income up a staggering 128% year over year. Are you freaking kidding me? Are you freaking kidding me? That's ridiculous the way Facebook is growing. And the fact that they're already such a big company, 128% net revenue growth. It's unbelievable. That's no other way to sugarcoat it. That is unbelievable, Facebook. Very well done there. Next one up, another tech beast, Amazon. So Amazon actually disappointed Wall Street because they missed analyst numbers for sales, but still, look at the sales increase year over year. They did $30.6 billion in revenue in 2006, this past quarter in 2016, versus last year they did $26.6 billion. So we're talking about a $4 billion increase. That's about a 20% increase in revenue. That is unbelievable. And then the net income really grew nicely from $1.03 to $1.57. So we're talking about 50% net income growth. So Amazon absolutely nailed some numbers, but they missed the analyst expectations for guidance, and they missed for revenue. So analysts probably just got up there a little too hyped about Amazon, but still, that's not even the most impressive thing I saw with the whole Amazon deal this week. With Amazon, the most impressive thing I saw was this statistic. An analysis by Slice Intelligence released this week found that 43% of all online retail sales in the US went through Amazon in 2016, as the e-commerce giant market share continues to grow. That is ridiculous, guys. 43% of all US online sales go through Amazon. Think about all the different retailers out there. I mean, every physical retailer out there, they have an online business, whether it's Walmart or whether it's Target or Kmart. It doesn't matter what company it is, whether it's some specialty store, they all have online businesses. And then you have online straight competitors like eBay and Zulily and a lot of different Etsy and a lot of different other, smaller e-commerce strictly companies. They're competing against all those guys, and they did 43% of all the sales. Oh my gosh, that is ridiculous. I saw that number, and that blew me away more than anything, because I mean, even Walmart in its heyday never came close to doing 43% of all the physical retail store sales. That is just absolutely incredible, guys. So hats off to Amazon. They are just knocking out of the ballpark, and they're just owning that space, and their market share is even growing. So unbelievable stuff there, guys. GoPro announced earnings. Now, it might not matter to most people, but to me, it absolutely matters because it's my biggest investment. The kind of key takeaways, without going into too much detail here, was they had the second highest quarterly revenue in the company's history, record quarterly revenue in the emerging markets and the Asian markets. The Hero 5 Black was the best-selling digital image device in units and in dollars in the United States and the emerging markets. So that was kind of the good of things, and then the bad for GoPro was actually the guidance was really horrible. They only guided to about $200 million in revenue, where analysts had it about $244 million, so really crappy guidance, and that is why the stock struggled on Friday. And if you want more into detail on GoPro and whatnot, my opinions, you can watch the earnings release video I put out a couple days ago on GoPro and a million other GoPro videos I have on this channel. Snapchat officially filed for its IPO. We talked about this in the last week's video about they might do it, and now they officially have. Snapchat parent Snap filed to go public Thursday. The social media company reported revenues. This is insane. Revenues of $404 million for the year ended December 31st, up from $58 million the previous year. They grew from they grew from $58 million in revenue last year to now $404 million the very next year. That is like parabolic type growth. But we've seen that with Twitter and Facebook and some of these companies right around the time they go public. They're just doing ridiculous numbers. But the bad news is Snap reported a loss of $514 million for 2016 compared to a net loss of $372 million last year. So they're actually losing more money. It's rare you ever see a company lose more money than they even have revenue. I mean, they had revenue of $404 million, but they had a net loss of $514 million. So they lost $100 million more dollars than they even had come through the door. That's ridiculous to me, but that's what you can have happen when you have a lot of venture capital money coming to you and you can just spend money like crazy and try to build on infrastructure and those kinds of things. And it's not uncommon. So the question is with Snapchat, a lot of people are kind of viewing this one as the next Facebook. And a lot of people are kind of viewing this one as the next MySpace, and it's going to be gone in a few years, or it's going to be a hot IPO, and then it's going to drop substantially, like a Fitbit or a GoPro or something like that. So you kind of got two sides. I mean, I was looking at comments on kind of Snapchat, and yeah, a lot of people were like, "This is the next Facebook. This is the next giant beast," and a lot of people are like, "No, this is the next Twitter, or GoPro, or Fitbit, or MySpace, or something," and they're going to be nothing. So let me know in the comment section what you guys kind of think about Snapchat. I would love to hear from you guys and what your opinion is on the service. So that covers what happened this past week, but what are we looking for in this next week? So a lot of companies are reporting earnings that I'm going to kind of be paying attention to. One of them is Disney. Disney's reporting numbers. That's a company I track. I'm not invested in it, but I do track Disney. Rio Tinto, that's coming out. It's one of the biggest mining companies in the entire world. Then we have Time Warner coming out with the numbers. Coca-Cola is coming out with numbers. CVS is coming out with numbers. NVIDIA is coming out with numbers. I broke down NVIDIA stock about a month ago on this channel, to see if I would buy it and whatnot. So that's a stock I kind of track now just a little bit, and I know a lot of you guys track NVIDIA. L'Oreal is coming out, one of the biggest cosmetics companies in the world. So we have multiple big companies reporting earnings that are kind of worth paying attention to, especially, Rio Tinto is a big one for mining, so you kind of get to see the global economy and how the global economy as a whole is doing, guys. So that wraps up episode 3 ever in history of the Stock Market News Recap Show. I hope you guys enjoyed it. Leave a thumbs up if you did. Follow me on Twitter for I'm a lot more active on Twitter, so you can follow me on there. Link is in the description. If you just came across this and you're not subscribed yet, you may want to. We talk personal finance in this channel. We talk entrepreneurship. I'm a business owner. I give away a lot of my business tips. We talk the stock market the most in this channel, including this series every single Saturday. Thank you for watching, guys, and have a great day.